S&P 500 hits new highs as GM slumps amid tariff challenges. In a surprising turn of events, the S&P 500 managed to close at an all-time high, despite the significant impact of tariffs on General Motors, GM, and the subsequent slump in its shares. This juxtaposition of record-breaking highs and company-specific lows has left many investors scratching their heads. Let's dive into the details and explore how these seemingly contradictory forces are shaping the market landscape. On Tuesday, the S&P 500 inched up to a new record close, a feat that was overshadowed by the steep losses incurred by General Motors. The automaker reported a staggering $1 billion hit from tariffs, causing its shares to plummet by 8.1%. This development has reignited concerns over President Donald Trump's global trade policy and its far-reaching effects on American businesses. Shares of Ford Motor also felt the heat, dropping by about 1%. But here's where it gets interesting. Despite the turmoil, the S&P 500 has been trading around record highs, buoyed by optimism about heavy spending on artificial intelligence. This has led to a rally in Wall Street's most valuable companies. However, the market is currently in a holding pattern, awaiting significant catalysts, such as the August 1st tariff deadline and the upcoming earnings reports from the Magnificent Seven tech giants. The impact of tariffs is not limited to the automotive sector. RTX, a major player in the aerospace and defense industry, saw its shares drop by 1.6% after cutting its 2025 profit forecast due to the costs associated with Trump's trade war. Even with strong demand for its engines and aftermarket services, the company couldn't escape the financial repercussions. Similarly, Lockheed Martin's shares tumbled by almost 11% after its quarterly profit plunged by about 80%. U.S. trade policy remains a significant source of uncertainty for investors and companies alike, with the August 1st deadline for many countries to reach agreements with the White House looming. Treasury Secretary Scott Bessent has announced plans to meet with his Chinese counterpart next week to discuss extending the August 12th deadline for tariffs on imports from China. However, other trade negotiations appear to be at a standstill, with hopes for a breakthrough deal with India fading and the EU considering countermeasures against the US. Despite the mixed signals, the S&P 500 managed to climb 0.06% to end the session at 6,309.62 points. The Nasdaq, on the other hand, declined by 0.39% to 20,892.69 points, while the Dow Jones Industrial Average rose by 0.4% to 44,502.44 points. 9 of the 11 S&P 500 sector indexes saw gains, led by healthcare and real estate. Volume on U.S. exchanges was relatively high, with 18.8 billion shares traded, compared to an average of 17.7 billion shares over the previous 20 sessions. Philip Morris, a notable exception, slumped by 8.43% after reporting second quarter revenue below expectations, as shipments of its ZYN nicotine pouches fell short of investor hopes. Analysts predict a 7% increase in earnings for the second quarter, with technology companies expected to drive much of the gain. However, after last week's mixed economic data, traders have all but ruled out an interest rate cut from the U.S. Federal Reserve at next week's policy meeting. They now see a 60% chance of a reduction in September, according to the CME's FedWatch tool. And this is the part most people miss. While the S&P 500 saw advancing issues outnumber falling ones by a 4.3 to 1 ratio, the market's resilience in the face of tariff-induced turbulence is a testament to its underlying strength. Yet, the ongoing trade disputes and their potential long-term effects on American businesses and the global economy remain a cause for concern. So, what do you think? Is the market's ability to hit record highs despite these challenges a sign of its robustness? Or is it merely a temporary reprieve before the real impact of tariffs is felt. Share your thoughts in the comments below. Wall Street's mixed day, earnings, trade talks, and market movements. Wall Street's mixed performance amid earnings reports and trade tensions. In a day marked by contrasting outcomes, Wall Street's major indexes displayed a split performance as mixed earnings reports emerged, and crude oil prices fell ahead of an impending trade deadline. The Dow Jones Industrial Average saw a rise, while the Nasdaq Composite faced a decline, reflecting the ongoing impact of President Donald Trump's extended trade conflict on corporate profit margins. This situation is particularly pressing as the deadline for negotiations approaches. The S&P 500 index managed to close with slight gains, but the underperformance of technology stocks weighed heavily on the Nasdaq, pulling it into negative territory. Gold prices continued to rise, benefiting from a weakening dollar, while U.S. Treasury yields experienced a decline for the third consecutive day. Robert Pavlik, a senior portfolio manager at Dakota Wealth in Fairfield, Connecticut, noted investors are seeking additional catalysts, and there are cautious remarks coming from various companies. The uncertainty surrounding tariffs is leading to mixed guidance on future expectations. As the second quarter earnings season progresses, nearly 20% of S&P 500 companies have reported their results, with an impressive 79% surpassing analyst expectations, according to data from LSEG. Analysts are projecting a year-on-year earnings growth of 7% for the S&P 500, a notable increase from the 5.8% growth forecasted earlier this month. However, the repercussions of the trade war are beginning to manifest in corporate earnings. For instance, General Motors reported a staggering 32% drop in its core profit for the second quarter, primarily due to hefty tariff costs that impacted its bottom line by $1.1 billion. As the August 1st deadline for a potential US-European Union trade agreement approaches, the outlook appears increasingly bleak. This has prompted EU member states to consider implementing anti-coercion measures in response to the situation. U.S. Treasury Secretary Scott Bessent announced plans to meet with his Chinese counterpart to discuss the possibility of postponing the August 12 trade talks deadline, as both nations grapple with issues related to technology and rare earth materials. Chuck Carlson, CEO of Horizon Investment Services in Hammond, Indiana, remarked, "These negotiations are quite typical. Progress often only occurs when absolutely necessary. Typically, nothing is resolved until the deadline approaches, at which point either an extension is granted or an unexpected resolution is reached." He further emphasized, on the flip side, Trump must eventually follow through on his commitments. If he fails to do so, he risks losing credibility, and his negotiating power may diminish as people begin to doubt his intentions. On the trading front, the Dow Jones Industrial Average increased by 179.12 points, or 0.4%, closing at 44,502.19. The S&P 500 rose by 3.99 points, or 0.06%, to finish at 6,309.59, while the Nasdaq Composite fell by 81.49 points, or 0.39%, ending at 20,892.69. Globally, MSCI's index of stocks rose by 0.07%, while the Pan-European Stocks 600 index declined by 0.41%. Emerging market stocks also faced a drop, falling by 0.31%. In the currency market, the US dollar continued to weaken as investors awaited clarity on trade negotiations. The dollar index fell by 0.5% to 97.36, while the euro gained 0.49% to reach $1.1752. Against the Japanese yen, the dollar decreased by 0.56% to 146.56. In the cryptocurrency space, Bitcoin saw a modest increase of 1.98%, reaching $119,320.90, while Ethereum experienced a decline of 2.41%, settling at $3,668.31. U.S. Treasury yields are on track for a third day of declines, with the yield on benchmark 10-year notes dropping to 4.342%. The 30-year bond yield also fell, as did the 2-year note yield, which typically aligns with Federal Reserve interest rate expectations. In the commodities market, U.S. crude oil prices fell by 1.47%, settling at $66.21 per barrel, while Brent crude dropped by 0.9% to $68.59 per barrel. Gold prices rose by 1.07% to $3,431.87 per ounce, with U.S. gold futures increasing by 1.15% to $3,441 per ounce. As we navigate these turbulent economic waters, one must ask, how will the ongoing trade tensions shape the future of corporate America? Are we witnessing the beginning of a significant shift in global trade dynamics? Share your thoughts in the comments below. Stock market hits all-time highs as Megacap earnings season begins. Market update July 22, 2025. Stock market today. A gripping tale of Dow and S&P live updates for July 22. July 21, 2025. At 6:36 p.m. Eastern Daylight Time. Updated on July 22, 2025, at 4:22 p.m. Eastern Daylight Time. As Wall Street braces for the high-stakes Megacap earnings season, traders have managed to keep stocks at record highs. Investors are also keeping a close eye on the latest tariff developments. Meanwhile, bond yields and the dollar have taken a dip. The S&P 500 has remained relatively stable, with over 400 of its shares showing an upward trend. The Magnificent Seven giants, however, have put a halt to their 9-day winning streak. Despite this, Tesla Incorporated and Alphabet Incorporated have shown promising growth ahead of their results. D.R. Horton Incorporated has led a surge in homebuilders. Kohl's Corporation has experienced a dramatic surge, reminiscent of the meme era, with gains as high as 105% before settling at 38%. In the late hours, Texas Instruments Incorporated has delivered a disappointing forecast. But here's where it gets interesting. Despite the overall positive trend, the market remains a hotbed of controversy. Some argue that the current highs are unsustainable, while others see this as a sign of a robust economy. What's your take on this? Do you think the market is heading for a correction, or is this just the beginning of a bull run?